Have you ever had that experience where you buy a stock thinking that it's going up, only for it to go down, and then because of cut loss, you sell it, and then days after it comes back up, but you are too scared already to buy it because of your past experience, and then this time it goes up, and then you miss it? Mm-hmm. I can see that nod here. Yes, I had that experience too, and that's why in today's video we're gonna talk about what happened there. Now, what we don't have there at that time is the easiest trading strategy a good trader must have to avoid this. This is spotting trends and riding it. I know you always hear this phrase, the trend is your friend, and I know cliches are boring, but among all trading cliches, this is the truest, and that's why we're gonna talk about this so that that experience I mentioned earlier will not happen again. Good day everyone, my name is Lloyd and welcome to today's trading tutorial video in Financial Freedom 101. So let's kick things off by looking into the idea of trend following. This is the most essential trading strategy, but most of the time you can still see traders that are trading against the trend, and that is why it's not surprising at all that we still see traders losing money. So first of all, let's look at the theory, and then afterwards we'll look at real trading markets. Let's look at it first, how it looks in the book, so that we'll know what trends are, how to spot it, and how to use it as your trading strategy. Alright, now, here's a normal market movement. You'll know that it's on an uptrend if the market prices does this. It rallies up, loses momentum, does a pullback, and then rises up again. The important part is it does not break the lower lows and makes a higher low than the previous one. Now, to draw the uptrend, you have to connect the lower like that. Now, our trading strategy for this is look to be a buyer at this area and then set your stop loss below that trend line. Now, you remember the experience that we talked about at the first part of the video. What happened there was we thought that the price was going high here and then it does a pullback and then at the trend line it goes back up again. So that was our mistake. So let's not do that again. Again, look to be a buyer at the trend line and set a stop loss just below the trend line. And so you've probably heard of this. Trends do not last forever, and this is what happens here. The price breaks the trend line, and a trading strategy would be to sell it here because this is a signal that the trend is changing. So that's how easy riding an uptrend is. Let's look at a downtrend. So here's a market that's going down, but at the early part, how do we know that it's on a downtrend? So here's what happens on a downtrend. The prices go down and then rallies back up, but this time the highs do not break the older highs. This is your signal for a downtrend. So what we usually do is draw a line on the highs and connect them to know the trend. Like this. Now, again, a trend line acts as a support, and the trading strategy you can do here is to sell short if you're caught on a downtrend. Now, when the prices go down and then pulls back up to the trend line, look to be a seller here with a stop loss just above when the trend started. And again, trends are not forever. So at certain points, this trend will break and go back up again. And this is what happened at this part. So this basically signifies that there's going to be a trend change and people will start looking at this stock to look for the best time to buy the stock again. So that's how it looks like in the textbook, and now we're going to look at the real markets. Now it doesn't always look as clean as the textbook, but we're going to see how it happens in the real trading market. Also, we'll look into how we could have played these trades following trends. Alright, so for our real market, I pulled up the best short-term market out there, which is Bitcoin. And let's see how trends work out on these markets. Now, first, the most obvious, the market at this area had a downtrend because of this lower highs. And let's draw a line on that one. Now, we don't really want to look at downtrends, but I just want to emphasize this. This was the downtrend, and it was broken in this area. And this is our sign for buying. It did go down a bit. Let's extend our downtrend. It did go down a bit, but it never went under it again. So this area right here is our signal to buy, as this signifies a new trend is coming. Now, if we did buy at this area, we would have ridden this uptrend of the stock. How do we know if it's an uptrend? It's because we now have a higher low. Now we draw a line connecting those higher lows, and we expect for the price to ride this trend. Now, it would have been best if you bought at this area, and so you would have been able to ride this rise. Now, we're already seeing selling at this area, so a good strategy would have been selling at this area and then wait for the price to go back down to the trend line, and then if there's buying at the trend line, we buy. Now, there is no buying showing here, and in fact, it did break down. So we were safe at that, and we would have already gained. Now, that's how beautiful trend line works. If we move forward, we see a downtrend. How do we know it's a downtrend? Because we have lower highs. And I want to show you how beautifully trends work. Let's connect these lines right there. Look at Bitcoin now. It did go down to this point. Right? Now, there's a break right now, and this is our sign to buy in. Now, for our long-term market example, let's look up SMPH. This is the daily chart of SMPH. We have an obvious climb here, so let's draw the trend. Now, again, you'll know that it's on an uptrend if it forms a higher low, which is what happened at the start of this climb. It did climb, go down at this point, and then it didn't go down further, as confirmed by this candlestick. Now what we do is draw a line on that, and then we have our trend line. Now, we would have bought here, it would have gone up to this point. This is way too far the trend line, so do not buy at this part. Always buy near the trend line. It does go down, so if you bought it here, you would have experienced this fall. Now, it did break the trend line, but at the next day, there were signs of buying, which pulled it up the trend line again. So this would have been the best time to buy again. And if you bought at this area, look at the gains you would have ridden for that day. It went up as high as this point. Now, we do see a sign of selling at this day, so a good strategy would have been to sell at this point and then look for it to go back down to the trend line, which is what happened on the next day. See what I mean? Now, a good strategy would have been to buy at the trend line as it will go up again and then set a stop loss below the trend line. And if you did that, you would have gained this much again and then sold it again here and then wait for it to go back down to the trend line. And as you can see, it did go down again. I don't know what will happen on the next day, but wait for it to go back down to the trend line. Alright, so there's a more logical way of trading. Instead of guessing if this stock is at its highest price, which is really hard, it makes more sense to draw a line on that uptrend, and when that line is broken, look to sell there. Next week, we're going to talk about breakouts and how to use that as your trading strategy. And so that you won't miss that video, be sure to subscribe to this channel. Once again, this is Lloyd. Let's get rich together. Peace.